But yeah, so like I said, a lot of videos planned in the near future. I think just because of how late I'm doing this one, I am going to push off lesson 5, which is the introduction to options, until tomorrow, which will be at 8 p.m. Eastern time tomorrow. I will release the table of contents for that one on my Instagram tomorrow sometime. Trying to see if this works. Okay, good. So I am live. Welcome everyone. All right. So today we're just going to talk about 8 strategies that me and my brother have kind of learned and thought of in the recent last 2 weeks. I want to share with you guys so that you guys, especially for the people who trade, who work full time, are able to use some of these strategies to trade during the time and really plan the night before, and so that they can have kind of a trading plan in place, and then they can do swing trades pretty easily based on some of these swing trade strategies that we thought of. So like I said, first off, we're going to just walk through the 8 strategies that we've come up with. Then I'm going to kind of just give examples on the main ones, which are primarily swing trading ones. And then that'll be today's lesson. It should be fairly short, and just kind of want to give you guys a few swing trade strategies, just because how I've experienced the morning run up, which is the 2-legged move strategy. It's really more of a day trade strategy from my experience. So I'm still going to look at it and be aware of it, but probably shift towards more swing trading for my smaller account. All right, so let's go through the 8 strategies here. One day trade strategy, which is the 2-legged move, or morning market runners, whatever you guys want to call them. So I won't go through that in a lot of detail, just because we've talked about it so much in the past few lessons. The next one is a swing trade. The 3 swing trade strategies. The third one, which is really not that great, but I'll go through it in chronological order right here. And the highlighted ones are the examples that I'm going to be giving in the rest for the rest of the lesson. I should probably highlight this one because I actually do give an example of this as well. Let me see. Morning earnings run up. Oh, no, I don't. Okay. So I'm going to have example 1 and then 2, 3, 4. I'm going to have 4 examples. 1, 2, 3, 4. I'm going to unhighlight this one. Okay. So for the 3 swing trading strategies, the first one is kind of trying to catch a preemptive move. A lot of the times, markets will move up or down in a certain direction, kind of preparing for certain news. And one of the most obvious ones is earnings, right? And so what you can do is look at the historical performance or pattern that a certain stock does in its earnings, and then see whether or not it makes sense to maybe buy the stock at 2 to 3 days before earnings is going to come out, and then sell the day before earnings comes out. Obviously, you don't want to be in the stock or holding the stock when earnings comes out, because you don't know the future and it could shoot up or down, and you're just trying to ride the run up and then get out, right? Because if it's wrong and it shoots down, well, then your whole trade was basically messed up. Number 2 is a swing trade. So that's a preemptive reaction, which is, riding a run up before something actually happens. The next one is a reactive reaction. So there's 2 ways to play reactive reactions. Number 1 is an overreaction on RSI, which means like post earnings or post breaking news. Basically, something huge movement happened and it was an overreaction, right? The market went too high or too low, and so it will correct itself a little bit, and you ride the correction essentially. And then another one is called a big or little seesaw, and essentially these are stocks that like to jump up and down as it goes in usually uptrend. And we're generally, like I said, I'm still having a bullish bias, and because I want you guys to trade that way, it's just safer. And like I said, Webull doesn't even allow you to short unless you have $2,000, and so it's just easier to look for bull biased or uptrending movements. And so in an overreaction and then in a big little seesaw, the overreaction is you're going to look for something that shot the stock price down, and then when it corrects itself, rides it back up a little, you will ride that uptrend. And then this big or little seesaw, you're looking for something that is generally uptrending, but it does so in like a up, down movement, right? A seesaw, up, down, up, down. And I'm going to show you a few slides as an example in the next few slides. The third swing trading strategy is a medium-term intraday directional fundamental trading. And so it's a mouthful, but essentially is you're trying to predict the market based on some news that you expect in the future. Now, this is very risky. I tell you guys, try not to predict the market. If you're going to do that, do it with very little capital. And I like to play with options this way, but usually, less than or 1 to 2% of my portfolio into each position that I play when I'm trying to predict a strategy or predict a movement. Like, for example, if I think there is going to be better unemployment numbers or better employment numbers this coming week, that means that'll generally be very positive for the stock market. Then I may want to play like some sort of bullish option or, play a bullish direction, like buying the S&P 500, something like that, and then wait for that news to come out and ride that uptrend. But this is predicting the market, which is generally not what you want to do. Instead, I want you guys to focus on number 1 and number 2, which is a preemptive reaction, which is look for patterns of run-ups during earnings, which is somewhat predictable. Nothing is 100% predictable. And number 2 is the overreaction on RSI. Like I said, I don't love technical indicators, but in terms of like medium-term swing trades, I think you do need to use the RSI. I think it is a somewhat useful indicator, and other technical traders are using it, right? And so you want to use what other traders are using. And number 3 is big or little seesaw on RSI as well. And I'll show you an example of that. Just want to touch on a few strategies that I will be touching on, I have shared or will be talking about in the future. Number 1 is options trading strategy. So I'm going to do a wide credit iron condor on my main account. You guys don't know what that means yet. But once we talk about options and selling options, excuse you, Raygon. That's my dog, sorry. You guys will understand that a little bit better. And then other strategies, breaking news, I've talked about this several times. It's just catching news as early as possible. I find Twitter or Trading Fraternity to be very helpful sources for this. And then you try to catch the movement before it actually happens, right? And then number 2 of other strategy is FDA calendar or the announcements. Go watch the playlist that I've made on my YouTube account, which is how to day trade biotech stocks. This is very risky, and basically it's gambling, because you know how I said you want to catch the run up and exit? Well, it's similar to playing earnings, except you want to look for that fundamental event, which is a FDA announcement, but you're going to hold instead. And then because biotechs are really volatile, it'll either jump up 50% or jump down 50%. I don't recommend this, but if you want to use a small percentage of your capital to play these very high risk, high reward trades, then I at least want to give it to you. So if you wanted to do it, you can do it. All right. Remember, everything said on my videos is just my opinion based on my trading experience and is for educational purposes only. Trading is very risky. Nothing I say is advice or recommendation. Read the description and trade at your own risk. Awesome. All right. So we'll go for the first one right here, which is the run-up. So the run-up here, or example of an earnings run-up is, for example, GM, right? If you look at the historical quarters, and then you look at, it looks like maybe 2 to 3 days before the earnings, which is, each candle is 1 day, and the dotted line is the day of. You can see, like, on the day of, it could shoot down, for example, FQ2, second quarter of 2018, or the third. When else did it shoot down? That's really the main one this quarter, and that's because, the actual earnings, the yellow dot, was below what the Wall Street thought it was going to be. For the most part, generally, the actual earnings has been higher than the Wall Street expectation, which is why it has shot up recently. But you just don't know, right? You can't predict whether or not the Wall Street is right or the actual EPS is going to be higher or lower. But what you can do is look at these patterns. In the last 2 or 3 days coming up to earnings, generally, you'll see that if you buy on the third day out, right here, then, except this one, the day before earnings, it generally trends upwards. And you can ride that trend and then get out before the actual earnings day. So that's a potential strategy. Hopefully that's very clear. You can look at the third candle before the dotted line. Right here, you buy in, boom, boom, it jumps up. Buy in, boom, boom, it jumps up. Buy in, boom, boom, it jumps up. So generally, it trends upwards as it gets closer to earnings. And so GM is a pretty good example. And then you can just look at any any ticker you want in the Analyze tab and the Earnings tab in Thinkorswim, and just kind of look for stocks that have earnings coming up and have a pattern of running up towards earnings. And so that's one swing trade you can do. And you can determine, how many days out before earnings you want to buy it at, just based on the pattern. And it looks like for GM, the third day is the best it looks like, at least from my perspective. 3 days before earnings, 3 days before earnings, and then you sell the day before earnings. Okay. So let's go to this one next here. An overreaction. And the ticker we're using is RPAI, and this is after earnings. And you can see earnings came out on, what day is this? It doesn't say, but it doesn't matter. It's a recent day. You can go look it up. So earnings came out. You can see this giant shoot down, and this white line is the 9 SMA. So since this is 15 minutes, then 9 15-minute period SMA essentially. And so you want to get this confirmation. The longer the period, the better. And so you can see RSI, when it's below 30, that means it's oversold, and when it's above 70, it's overbought. I just do a 14 period RSI. You can do whatever you want. 14 is the default on Thinkorswim. And so you can see this huge overreaction here. And then where you're going to enter is when the RSI is starting to trend upwards, and the candles are starting to stay above the 9 period SMA. And so on the 15-minute mark here, it starts staying above 1, 2, 3, 4, 5 candles here. So as it stays up 1 or 2 candles, you can buy in and ride this uptrend as it corrects itself from being oversold. So that's number 2, overreaction on earnings. That's an example from earnings. And then another one is a big or little seesaw. And so this one is a little bit more difficult to find. So I talk about it here in terms of how you can find them. But this is the third example, big or little seesaw. So you can see why I call it a seesaw. It just goes up, down, up, down, up, down, up, down, as it trends upwards. And generally this is a little seesaw because it goes from overbought to more normalized, but it never goes to oversold. But a big seesaw is essentially a ticker that likes to go from overbought to oversold to overbought to oversold to overbought to oversold. It's not the greatest example, but an example that you can look at is Tesla, for example. And I actually have the RSI study here on the lower. In order to see it, you're not going to see it here. What you have to do is you have to full screen it. So double click the name, and then the RSI technical indicator is shown. And that's true for this one as well, right? And so you click here, you can see it goes from oversold to overbought, and then it comes down to, it doesn't quite get to oversold, and then goes overbought, and then gets close to oversold, then overbought. But then sometimes it does go to oversold and then up to overbought. A really good big seesaw is one that commonly goes overbought, oversold, overbought, oversold, overbought. And then you can look at how many days it takes to go from overbought to oversold. Maybe a day chart is probably better for this. And you can see here, oversold, and then, what is this? About a few months goes to overbought. It close to overbought, then it takes a few months to go to oversold, a few months to go overbought. It's about 3 months between each time, actually. It's pretty crazy. And then 3 months overbought, 3 months, 3 or 4 or 5 months oversold, a few months overbought, oversold, overbought. Hopefully you get the idea. So you look at the RSI, and then that should give you what you need. So I would look at the daily or the 15-minute one. And generally, to look for this, for the big seesaw, you could do a scan for looking for stocks that go from oversold to overbought to oversold within a certain time period. The little seesaw is a little bit harder, but what you can do is go look at recently uptrending stocks and then look for the RSI pattern and see if it looks like a seesaw based on the RSI. We're not going to show an example of the predicting the future because this is just, you can't show an example. You just kind of have to think of a fundamental event in the future, and then have an opinion on it, and then trade based on your opinion of that future fundamental news. We're going to skip the options trading one. We're going to skip breaking news because I've talked about that plenty of times. And the next one we're going to look at is the FDA announcement. So I'm not going to go into much detail, but there's a 3-video playlist on my YouTube channel if you want to learn how to do biotech plays and how to trade biotech stocks, go watch that 3-video playlist. It's less than an hour in total length. Essentially, you're trading at the FDA calendar, but what I will show you on here is this website. It's talked about in the videos, but I'll show you guys really quickly before the end of this. Biopharma. And so Biopharma Catalyst, what you can do is you go to the FDA calendar, not the PDUFA, FDA calendar, to look for catalysts. The PDUFA essentially is kind of closer towards the end, and so that news has less of an impact on biotech stocks. What you're really looking for is kind of like the early indicators, whether or not the stock is progressing well. Like I said, the videos explain it much better than I'm going to go into depth here. But if you're interested, go learn how to use this website from that playlist and from Trading Fraternity. Highly recommend it, but it's very risky. It's essentially gambling. I would not use this as my main strategy, but if you want to use a really, really small percentage of your capital to play around with this, I at least want you to know that it exists, because I know a lot of people trade biotech, right? But it is very risky. All right, cool. So that is today's entire lesson. Hopefully you learned a few swing trade strategies that you can use this week. Make sure that you have a long-term portfolio before you day trade and swing trade. Do not trade with money you cannot afford to lose. Go test some of these new strategies you've learned here through paper trading or using small amounts of money, so that you can really get used to finding it and capturing it and entering and exiting at the best times before you start trading it with money or large amounts of money. Comment below if you want me to cover anything in the future lessons, or if you have any questions on this video lesson, and I'll answer them. I always see your questions and comments, so happy to answer them here in the comments below if people aren't able to catch my lessons live. And I'm not going to mention this. Do it if you want to. It's not required. Like I said, make sure you have a long-term trading portfolio before you day trade and swing trade. Please paper trade or use a small amount of capital when experimenting with new strategies, and may volatility be ever in your favor. Good luck this week in trading. I'm going to stay on for a few more minutes to answer any questions you guys have. Otherwise, you guys are always welcome to comment below, and I'll answer your questions there. Any questions? If you have any questions on like how RSI works, I recommend you watch maybe a YouTube video on it or Google it. I'll admit that my understanding of it is not very strong. All I know is that when the number goes over 70, it's overbought, and when it's under 30, it's oversold. So that's really all I use it for. But if you want to understand it better, I would Google it or watch a YouTube video. All right. Well, thank you guys for watching. As always, I really appreciate the support. Give me a thumbs up if you found this very useful. Hopefully, you guys will be able to take advantage of these strategies and be more successful swing trading, even though you have a full-time job. And as always, may volatility be ever in your favor.